So let me ask you a question. If someone told you 30 years ago to put every dollar you had into a house, you probably would have said, yeah, that sounds smart. And honestly, back then, it was. But we're not living back then anymore. Today I want to break down two investments, residential real estate and silver bullion, and show you why the math has changed more than most people realize. Let's start with the golden child of American investing, your house. People love to say, my house doubled in price. And yeah, maybe it did. But here's the thing nobody wants to talk about, so did everything else. In 1990, the median home price in the US was around $120,000 and the median household income was about $30,000, roughly a 4-to-1 ratio. Fast forward to today, and the median home price is over $410,000 while median income is around $80,000, that's now over a 5-to-1 ratio. So homes didn't just go up in price, they got less affordable relative to what people actually earn. Your house appreciated? Congratulations. So did a loaf of bread. Now let's talk about the part that really stings, the costs they don't put on the for sale sign. A brand new study from Zillow and Thumbtack found that the hidden costs of homeownership now average nearly $16,000 a year. That breaks down to almost $11,000 in maintenance, about $2,000 in insurance, and $3,000 in property taxes. That's over $1,300 a month on top of your mortgage. These costs went up 4.7% last year while incomes only went up 3.8%. So, you're literally falling behind just by standing still. And maintenance? Oh, it gets better. The average roof replacement in 2025 runs between $7,000 and $20,000. A new HVAC system? That's another $5,000 to $12,500. So every 15 to 20 years, you're writing checks that could buy you a pretty nice used car, or, a whole lot of silver. But sure, tell me again how your house is an asset. Last time I checked, my silver bars don't need a new air conditioner. Now here's where it gets really interesting, homeowners insurance. Premiums have surged 40% in just 6 years. And that's the national average. States like Colorado saw a 77% jump, Nebraska over 72%. In some parts of Florida, people are paying an extra $500 a month just in insurance. And here's the kicker, major insurers like State Farm, Allstate, and Farmers are literally leaving high-risk states. Try selling a house nobody can insure. So not only is it getting more expensive, in some places you can't even get coverage. But what about equity, right? Everybody loves talking about equity. Just take out a home equity loan. Okay, great, at what interest rate? Right now the average home equity loan rate is about 8%. A HELOC? Around 7.3%. So you're borrowing against your own house and paying the bank a premium for the privilege. That's not free money, that's expensive money wearing a nice suit. Now let's zoom out even further, because there's a structural problem with American real estate that almost nobody talks about. The Strong Towns organization has been sounding this alarm for years. Here's the basic idea. After World War II, American suburbs expanded like crazy. Municipalities loved it because new developments brought in short-term cash through permits, fees, and mortgage-related taxes. They also brought federal funding for building new infrastructure. Sounds great, right? Except here's the catch, that infrastructure doesn't stay new. Roads crack. Sewers fail. Pipes corrode. And the city is on the hook to maintain all of it, forever. The first generation, everything's shiny and cheap to maintain. Second generation, still manageable. But by generation 3? The bills come due, and cities don't have the money. As Strong Towns put it, cities have been confusing growth with wealth creation, and many have spent 3 generations destroying their own financial foundations. The result? Massive municipal debt, deferred maintenance, and eventually, higher taxes, reduced services, or both. So that house in the suburbs that always goes up? It might be sitting on infrastructure that the city literally cannot afford to maintain. Alright, now let's talk about the other side of this coin, and I mean that literally. Silver. First, let's start with what the Constitution actually says. Article I, Section 10 states, and I'm quoting, "No state shall make anything but gold and silver coin a tender in payment of debts." Silver isn't just a commodity. According to the founding document of this country, it's money. In fact, Utah passed a law in 2011 recognizing gold and silver coins as legal tender. So when people say silver is real money, they're not just being nostalgic, they're being constitutional. Now, the price of silver has had a wild ride over the decades. In the 1990s it was trading between $4 and $6 an ounce. From there it climbed to nearly $50 in 2011, then got knocked back down and spent years consolidating around $15 to $20. But in 2025? Silver absolutely exploded. It opened the year at about $29 and closed above $71, a 147% gain in a single year. Right now, as I'm recording this, silver is trading around $77 to $80 an ounce. That is not a typo. So, what's driving this? Two words: industrial demand. Silver is the most electrically conductive metal on the planet, and modern technology is eating it alive. Solar panels alone now consume over 25% of annual silver supply. Electric vehicles use silver. 5G infrastructure uses silver. And here's the big one: AI and data centers. Global IT power capacity has increased 53 times since the year 2000, and all of that hardware needs silver. Every server, every chip, every connection. The Silver Institute reports that industrial demand hit a record 680.5 million ounces in 2024. And supply? It's not keeping up. The silver market has been in a structural deficit since 2021, 5 consecutive years of demand outpacing supply. The cumulative shortfall from 2021 to 2025 is nearly 800 million ounces. That's the equivalent of about 10 months of total global mine production just gone. And mine supply has actually been shrinking at a 0.9% annual rate since 2020. You can't just flip a switch and open a new silver mine, permitting alone takes years. Now, has silver been suppressed? Look, I'll let you draw your own conclusions, but here are the facts. In 2020, JP Morgan paid $920 million, the largest penalty in CFTC history, for manipulating precious metals futures through a practice called spoofing. That's where traders place massive fake orders to move the price, then cancel them before execution. This went on for at least 8 years, from 2008 to 2016, involving hundreds of thousands of fake orders. The head of their precious metals desk was charged. So when people say silver has been held down artificially, there's a $920 million receipt that says they might have a point. But here's the thing: even manipulation has its limits when the physical metal starts running out. In December 2025, roughly 47.6 million ounces of physical silver were claimed from COMEX warehouses in just 4 days, about 60% of registered inventory. The market went into backwardation, meaning the spot price was higher than futures prices. That's a sign that people want the real metal right now, not a paper promise for later. So, let's bring it all together. On one side, you've got a house that costs more than ever to buy, more than ever to maintain, more than ever to insure, built on infrastructure that cities can't afford, and you can borrow against it, for 8% interest. On the other side, you've got silver, constitutional money, record industrial demand, 5 years of supply deficits, and a price that gained 147% last year alone. One of these requires a roof replacement every 20 years. The other one fits in the palm of your hand. Now, I'm not a financial advisor, and I'm not telling you to sell your house and stack silver bars in your closet, although, honestly, that closet would look pretty cool. What I am telling you is that the just buy a house advice that worked for your parents might not work the same way for you. The game's changed. The numbers have changed. And silver? Silver's been waiting a long time for its moment. I think that moment is now. If this opened your eyes even a little bit, do me a favor, smash that like button, subscribe to the channel, and hit the bell so you don't miss what's coming next. We go deep on silver, the markets, and everything they're not telling you on the evening news. I'll see you in the next one.